Good morning, everyone, and Happy New Year. It's good to be back. My name is Doug McKay. I am the founder of Quantum Leap Futures, and this is our pre-market Quantum Leap. This is our pre-market session where we go over the market, take a look at the macro to the micro, pick out our trade areas, our targets for the day, and what our hypotheses are. This is a subscription room, so I will put up the contact information in just a second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you are interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website. This is not a commercial venture. Or you can give me a call direct, 647-545-8065. And of course, if you like this video, you can take a look on YouTube, do a search for Quantum Leap Futures, and there's probably over 300 videos there, or 300 days of pre-market sessions, so you can get an idea of what we do and what our success rate is. On Twitter, if you like what I do, please follow me at Crazy2. Okay, so let's start the year off with the news. There's a couple things I want to talk about in terms of news, but this morning we have 9:30. We've got RBC manufacturing PMI for Canada. 9:45. We've got final manufacturing PMI, and then for the U.S. And then 10 o'clock we've got ISM manufacturing. And that'll be the big news for the day. We've got construction spending at 10 and ISM manufacturing. And later tonight we've got the Japanese bond auction. We are starting earnings, so keep an eye on earnings. They're going to be important this week. Today we got BMO and AMC. The big ones are going to start tomorrow. And this is a good site if you want to watch for earnings, earningswhispers.com, and gives you how many are coming out. You can also take a look at and sort it in different ways. And we won't get into this, today. We're going to talk about that more later. Of course, the big news is our 2016 Open. You know how important I follow in terms of the Open. And our Open for 2016 is 2037.75, 1061.50 in gold. Had a huge sell-off overnight, and we opened at 37. I thought they were going to actually come up into the 45 area. That was the micro composite VPOC, but they came up into the last trading day of the year, up to the VPOC, and basically failed from there, and then they sold off. Very important to note that this is positioning, and the heavy selling did come in once the Asian markets opened, and accelerated once we got into the European market, and the OTF has been very much involved. And our 20 weekly period ATR is running at 77.50 right now, and we basically overnight have already put in 48.5. So we do have a trend overnight, big huge range, and they're holding it below the VPOC right now, overnight VPOC at 2006. But we'll get into that even more. Of course, I always like to start my morning off with a basic view of the trends and see where we are within the macro, and then drill down to the micro. I use a 9 EMA and a 20 SMA, and what I'm looking for here is slope and separation, and where we have the trends being challenged or violated. You can see we've had this strong upward trend for the last couple of years. We challenged it in August and September, took it back in October, held it in November, and then challenged it again in December. And our year open last year was 2055. think our settlement from 2014 was 2059. We hadn't had 7 years in a row of have a higher settlement, and it looked like they were going to do it, and then they sold it off into the close, and we closed at 2036.50, and challenged, and we actually went down to 2031, I believe, and challenged the trend. So far, we've opened in 2016, and we've sold off, and we are now violating the trend on the monthly. So we do have some weakness coming in. It is the first day of the month, and we've already had a 43.5 point move down from the 2016 high so far, which is at 2043.50. Going to the weekly, you can see that the weekly is now starting to get some slope and separation to the downside. We're below the 9 and the 20, so we are seeing some weakness. Support's going to come in the lower 1900s here, and I'll show you where I think key lines in the sand are for the week. Going to the daily, you can see we've had this big sell-off. They've just been fighting this in December, fighting the year open at 2055, 2015 year open, I should say, and then the bulls gave it up at the end, and the bears sold it off, and now we have the possibility of starting a downward trend on the daily. Once we get to the 4 hour in the intraday, you can see that the trend is accelerating, and we're getting good slope and separation basically on all the intraday time frames. You can see that we did take out, we had this naked cross here at 2016 on the 4 hour. We took it out. They have left one above at 2058. There are some naked crosses above us, so I don't think that we're not going to see some type of a rally. I just don't know when it's going to happen and from where. We've left some naked crosses above us, and as you know, these naked crosses are very rarely left unchallenged. Just, they're not necessarily challenged the same day that they're put in. But you can see this one was back from the 22nd of December, basically, before we got that bit of a weak Santa Claus rally. We do have a technical gap right here. A close of the tech gap is going to take us up into the 2027 area. I'm watching the 2022. That's my key line in the sand right now above. I'll show you why when we get to the composite. Going to the 30-minute, same thing, very strong trend, good slope and separation. They created this technical gap, came up, tried to close the gap. They did close the gap and then failed off of the 9, and now we're getting continuation of the trend down on the 30-minute. So still showing weakness on the 30-minute. And then on the 15-minute, same thing, very strong slope and separation to the downside. There is this naked cross up here as well at the 2046 area. This is one of the reasons why I thought we were going to get up into the 2045 in addition to the microcomposite VPOC, but they sold it off, and so far we've came up, closed the technical gap on the 9 and the 20, failed off the 20, and closed below the 9 and the 20, and we're getting continuation to the downside. On the 5-minute, one to pay attention to for possible move up this morning and possible failure is right at that 2050 mark. So keep that in mind. You can actually see we had got down to the overnight low at 95, had Mr. Sneaky, technical gap, started this trend up, left a naked cross, and then they sold it off, closed out the naked cross, and now we're below the 9 and the 20 again, but I would expect them to come up here and test this 2050 again. Going to the big picture on the composite. Now remember, this is the year open. We've got a huge gap. There's over a 43-point gap right now, 44 thereabouts gap. It's not likely to get closed. So the key areas to keep an eye out right now, obviously, is that naked cross at 2050. A key trade area for me is going to be this 2003.25. It's a CLVN. It's also right just above this 2002.25 former microcomposite VPOC. The reason I thought we were going to get to 45 last night when we had that bit of a rally off the open is that was the 6-day or the weekly VPOC, microcomposite VPOC, but they failed at the VPOC from the last trading day and never made it. And then they just got aggressive. They fell outside of balance. Remember that our microcomposite that we were in the longer term, the value area was between 89.50 and 33.50. Once they got below that 33.50, it was all over, and they just let it go and took it all the way back down to 95, basically right down here to this 96.50 area. Found some buyers there, and then they've been able to hold it, and they've come up and tested the 2000 a couple times. Below us, the key line in the sand below right now is going to be this 91.75. That will put us below the Globex low for the night and below a key CLVN. If we get below that, I think they'll get aggressive and take us down into this 87.25, possibly even down, take out this naked close. This naked close goes all the way back to October the 14th. Remember that this microcomposite that we've been watching started on the 15th. So this is where the last spot they held, they came down to this 77.25 after breaking out of this lower longer term microcomposite that we were in, where they had the value area high at 71 and the value area low at 83.75. Broke out, held value, came back, tested the first breakout, microcomposite VPOC, and then it started to rally, and this overall longer term microcomposite. Now we've fallen back out, and we're back below the 2000 level. They can't hold this 2000 level. They're likely to come down into the 87.25, but I would think they'd come closer to the 76, probably come down and test the microcomposite value area high here at the 71.75. Below that, then we're back inside of this longer term balance, and the next big key destination below us is going to be this 44.75. I'm looking at two things. I'm looking at the 66 area, and I'm looking at the 44.75. Our weekly ATR downside target takes us down to 66, and there's a couple other things there that I want you to pay attention to. But the key line in the sand below us right now is going to be 91.75. If they can hold that, I think they might try to rally it into the 2000s again. If they get above the 03.25, the first key target above us is going to be this 13.25, and then the key line in the sand above is going to be 22. Why? Because it's not only the CLVN, but it'll also take us back to the half gap fill. And if we get above the half gap fill, they'll probably try to get aggressive and take us up into the 29.30 level. But again, I think it's going to be very rotational today as they balance this out, unless we break the 91.75. Below the 91.75, then I think we see continued weakness and we get ourselves into a continuation of the trend. We could have a really big day. Just keep in mind that we've already put in over half of the weekly ATR. 48.50 is pretty huge, but that's not unusual as they position the new year, the first trading day of the new year. But don't get me wrong. I'm seeing weakness in this market, and I think the key trading plan for this week is to sell rallies at key areas. If you haven't had a chance, go back and read Marvin's radar. I think he's got it nailed in terms of selling the declining value area highs. they're going to run this. They're going to run value in all kinds of ways this week. They're going to do it on the weekly, on the daily, on the Globex, on the hourly, and I think the whole plan for the week has got to be sell-off. If we get above 22, then I think they'll try to get aggressive and they'll try to get it back and possibly come up into the 30 to 40 level, possibly even try to come back up into that 45. 55, is no longer going to be a significant number for me. It's going to be above, it's going to be the 59.75, because above 59.75, then we've got the magnet. Remember that the composite VPOC is still up here at 2070.75. So if we get into this upper distribution up here and break out of the last week's value area above the 59, then I think you've got targets at 65.75 and 70.75. But right now, the key area to watch this morning, is going to be this 2003.25 and 91.75. And then the big key line in the sand above will be the 22. Above the 22, the change percentage of range target is 2041.50. The floor pivot is also 2041. So I think if we get above this 22, then we could get a bigger rally. Anything below 22, I think it's chop, and we could see a range between the 91.75 and 22. Above and below that, I think we get into a take-back trend to the upside towards the floor pivot and the value area. Break below 71, I think we get continuation of the trend and a move down towards that 76.50 and possibly the 66. All right, so let's take a look at the overnight. Overnight, you can see we opened the year at, let me just bring this in. We opened the year at the 37.75 and basically tried to hold that, rallied up into the VPOC on the last trading day and failed, and then they just sold it off all night. Very much a trend day overnight. Our our VPOC is 2006. Our overnight low is 95, which is also our declining value area low at 95 on the 24-hour. And then our high is up here at the 43.50. You've got this, couple minor distributions in around the 42, 29.75. That's why I was looking at that 30 level, in around the 21, 22 area, which is my key line in the sand, and that is midpoint for overnight as well, is here at 1950. And of course, we've got a naked close on the 24-hour at 92.25, and that's just above our key line in the sand at 91.75. So I've already got those labeled on here. We're currently trading 97.25. We've got the 2000 level, but I'm not picking that as a trade level. I'm going to be using 2000. Let me put this over here. Let me move this here. I'm looking at the 2003.25 CLVN as the trade level. And then our key line in the sand is 91.75. There is a naked close sitting down here at 92.25, and our overnight low, of course, is at 95. We could expand that, where we're trading right now. Come on. So I would look for the overnight low to get taken out sometime, between now and the first 30 minute, the RB3, a takeout of the 92.25, and a test of the key line in the sand. If we get below the key line in the sand, then I think they're going to get aggressive, and the first target is going to be this 87.25. And there's really not a lot to hold us up here. There's a little CLVN at 84. But I think if we get below this 91.75, they could get aggressive. We've got large targets down here, naked VPOC at 80.50, a naked close at 76.50, another one at 74.50, and then we've got our weekly ATR target. And I wouldn't be surprised if they go down here and hit this if they break that 91.75. I won't. I don't want to not emphasize or put enough value on how important this 91.75 area is going to be. If they can't hold the 90s, then they're going to get aggressive and they're going to try to push this down. I personally think that we could hold, take out the naked close and the naked the overnight low, and then rally back into the 2000s and try to get a little bit of a upward rally into, we've already broken the daily ATR target to the downside. So, there's, if we come back up into this 2010, I'd be looking for an actual target right here of the 13 and a quarter, with the naked VPOC here at 27.17. And then, of course, the key line in the sand above is going to be this 22. Above 22, we've got room so far to come back up into the 28.50. The target I'd be looking at, of course, is going to be this 20.30 and a quarter. It's the microcomposite 6-day range low at 20.30. It's also our low from the last trading day of the year. And then above that, you've got the 33.50, which is going to be, I'm going to label this because this is going to be an important level as well. And this is our longer term microcomposite value area low. So the MC value area low. And then just above that, then I'd be looking for the gap close. But it's very rare to see a 40 plus point gap closed, although it is the first trading day of the year. Of course, above that, the value area low is 37.50 from the last trading day. What day was that? Was that Friday? That was Wednesday, right? No, that was Thursday. So the last trading day, last Thursday, our value area low was 37.50 and our year open is 37.75. So if they get back up inside of the range, then you probably see a rare gap close. But again, it's all going to be about this 22. Above 22, I think they can get more aggressive and at least come up and test the the range low and get our daily ATR up target. Above that, into the 33.50 to test the the value area low on the microcomposite, and then it's going to be all about 37.75, 37.50. Once we're back inside of value, then we're back into taking back the whole Globex session and back into a trend day on the upside, and targets would be 41.50 and 43, with the overnight high at 43.50. Our December FOMC number is still up here at 47, but again, I think it's it'll be very rare if we get back up into this area. Right now, I'm concentrating on between this 91.75 and the 2010, 2022 as possible range. And then we've got to the downside below the 91.75 or 87.84. There's really not much holding us up. There's no real, if we get below 91.75, I just try to stay short and look for continuation of the trend down into this 80 possibly even 74.50. The first key level is going to be the 66. It should really be the 67.75, but since it's our weekly target, so I'm going to put the trade level at 67.75 because that could be where the first bounce down here could happen. This is a weekly target, not a daily. And then below the 67, I'd be targeting the 62.50 and the 52.25. And again, there's not a lot of support down here until we actually get down into this. This is the next big target below is going to be this 44.75. It's key in a lot of areas. And then support below that comes in at 41. And then, we get into those lower numbers. I don't think we're going to get down there today. That would be one of the largest trading days probably in history if we did. But right now they're holding above the overnight low at 95 and trying to come back up and challenge this 2000. So that's what I'm looking at. Let's just take a quick look at the Keltner. So far right now, the Keltner center line is sitting right at the 99 level above 2000. The move to the upper Keltner line is going to be 2,450. Of course, I'm looking at the 03.25, which could be where it is once we get there. The overnight VPOC, I'm sorry, the overnight valuary, can't think. The overnight VWAP is at 2010.50. That's also why I'm looking at that 2010 level. And then the move below the 99, the move to the valuary lows take us down to the 93.50, take out the overnight low and possibly test that 91.75 level. So you can, the valuary low on the 24-hour takes us down right to our overnight low at 95. All right, quick look at gold. Gold has just been in this consolidation going all the way back, to this November time frame, and we've just been chopping in around this 1070. We are now getting above a key line in the sand in gold, which is at this basically the 77 level. If we can hold that level, I'm still looking for a move up to test the 1100. Big target above is going to be the 80, 94.50, and then of course the 1100. Once we get back above 1100, I think we get a bigger rally on gold. We get back below the 65.60, and there's not a lot holding us up down here. I'd be looking for a move down into the 1050 area again, and if we don't hold that, I do not think this 45 area is going to hold. I think we're going to have to come down to the 1029 and probably test these lower numbers with the next big target down all the way at the 1000 level. But they seem to be holding it up and consolidating it here. So if we can hold above the 77, we could start this long-term rally and see gold rally in 2016. If we get into the 1100s, then my main target above is not going to change. It's going to be back up here at the composite VPOC at the 1200 level. I could see us hitting the 1200 level in gold if we can hold the 1100s sometime in the first half of the year. So that's going to be it for our first pre-market morning leap. Glad to be back. I'm feeling very well rested. I'm looking forward to 2016. I think together, we all work together, we all trade together, we all participate and engage ourselves. We can have one of the best trading years. There's going to be a lot of opportunity this year, and I think there's going to be a lot of money to be made. So welcome back. Trade well, trade safe, and we'll catch you on the flip side.